Good morning, everyone. Last class, we went over the summary of financial statements. So you should remember the 4 financial statements. And what are they? Let's write it down if you don't remember, or if you weren't here. I is for income. E is for equity. B is for balance sheet. And C is for cash flow. So the 4 financial statements: income, equity, balance sheet, and cash flow. So, are you ready to do your IEB? You should be ready because we did some practice and we'll do a quiz later on in the class. Today, we are going to talk about dealer, which is an acronym, CR, ADE, LER, another acronym. We're going to talk about chart of accounts, which is sometimes called the COA, journal entries. So one is on the left, one is on the right in terms of your T account. And we may briefly introduce the accounting cycle. So these are fundamental concepts in accounting. We're again focusing on dealer, chart of accounts, journal entries, and introducing the accounting cycle. So let's go ahead and write down what does dealer stand for if you weren't here last time and you need to review. D is for dividends, and D can also be for drawings. I have it right here. E is for expenses, and these increase with a debit. A is for assets, and these increase with a debit. Liabilities. This increase with a credit. Equity increase with a credit. Revenues increase with a credit. So you remember dealer so you can understand which accounts increase with debits and which accounts decrease with credits. And this is applicable in all the accounting that you will do or the bookkeeping. Now, let's look at the next acronym. Acronym number 2, DC ADE LER. What is that for? That is to remember debits and credit. So it's quite similar to dealer. Everybody got that? So debit, what goes on the debit side? ADE. Put all the accounts on the credit side, LER. So in this acronym, we have 2 categories: assets and expenses. Assets and expenses, they increase with a debit, right? And the D right here stands for drawings, and it can also be used for dividends. So what are the credits that increases? Revenues, liabilities, and equities. So going from the bottom, revenues, equity, and liabilities. So assets and expenses increase with debits, liabilities, equity, and revenue increase with credit. Make sure you write them down. All right. So we're going to go to the next slide. And we're going to see that in this slide, I have put up all the 3 ways you can learn it. So every one of us are different learners, right? Some of us would prefer the T, would look like more like an art. Some of us want to read it, categorize it. with dealer, learning from acronyms, and some of us may just want to learn it by using a song, using a poem, whatever you do. But in the old way of learning it, we say assets increase your debit, assets increase your credit, liabilities increase your credit, liabilities decrease your debit, equity increase your credit, equity decrease your debit. So each person may want to learn this any way they choose. But most of us will do what? Make notes. Everyone make notes when they're doing a counting. Because a lot of this, you will need to do it over and over again. Now we're going to talk about the chart of account. What is the chart of accounts? The chart of accounts is a structured way to list all of the accounts used in a business entity. Again, it's an organized way to list all the accounts used by a business entity. What does it include? It includes your assets, it includes your liabilities, it includes your income, it includes your expenses. You may be like, where do I put dividends? Where do I put drawings? They go with the equity. Everybody got that? So again, dividends, expenses, assets, liabilities, equity, and revenue, they're all categorized. So how many categories do you get? Do you get 6 categories? No, you get 5. So the D, again, goes with the equity. So let's look at it. The first thing that you do is assets is the one that gets number 1. Asset gets number 1, and that's the leading number, or it begins with number 1. Liabilities begin with number 2. The leading number is 2. Equity begins with 3. The leading number is 3. Revenue is 4. Same thing, the leading number is 4. Expenses is 5. The leading number is 5. So what are assets again? It's resources owned or controlled by the entity. Example, cash and accounts receivable. Liabilities, obligations owed by the entity. Accounts payable, loans payable. Equity, ownership interest in the entity. Example, common stock and retained earnings. Income or revenue, it increases in economic benefits, sales, and services. Sales revenue, service revenue. Expenses, it decreases in economic benefit. Example, rent expense and salaries expense. So again, the chart of accounts provides a way for us to organize, a way for us to categorize financial transaction and prepare financial statements. Again, journal. So we're going to look at a little bit now on journal entries, and most of this are going to be definitions. So what is a journal entry? A journal entry is where you record a transaction and it involves 2 sides. So everything in accounting involves 2 sides. One is a debit and one is a credit. The left side is the debit and the right side is the credit. And this is what we call the dual entry method of accounting. So when you're doing accounting, at all times, at least 2 accounts are affected. So in this double entry system, we're maintaining assets equal liabilities plus equity. Again, assets equal liabilities plus equity. So let's look at this transaction. On July 1, Allen Mechanic fixed Mr. Henry Toyota Matrix car for $2,500. So who is Mr. Henry? He's a customer. And how did Mr. Henry pay? He paid in cash for the repair. Now to Mr. Allen, the mechanic, he's getting cash. What is he going to do with his cash? He's going to put it in his bank account for $2,500. But remember, you're doing accounting. So accounting means you account for this money twice, or you put down the money twice. So what do you call the other account? Income. He has made some income. So you record it as cash, or you put it in the bank account. And when you get paid, you put it as income. Everybody understand? Now, if you look at the bottom, you will see that you have totals. When you have your debits and your credit, they need to be total. They need to be balanced. So that is talking about the journal entry system, and we'll do some more in class. So the T chart is talking about what? Debit side and the credit side. If you notice, most of the time, we're talking debits and credit in accounting. And our debit means left and credit means is right. And my friends, you have to learn this. Now, as I said, I'm going to introduce the accounting cycle. The accounting cycle has how many parts? It has 8 parts in most textbooks. So in the first step, what do? We collect information. That's the first part. We're going to collect information. Then the second part is going to be recording. Then we're going to do posting to the ledger. We will do trial balance, adjusting entries, financial statement, closing entries. So there are 8 parts. I only listed 7. But we're going to do 8 parts in the textbook. So this is just to give you an overview, and later on we'll work out or we'll do some calculations on the board. Why do you need to understand all of these systems and all of what I'm talking about today? Is so that you can maintain accurate financial records and provide meaningful information. So when we say meaningful information, let's say Mr. Allen wants to go ahead and borrow money from a bank. He needs to have financial statements. Let's say Mr. Allen wants to expand his business. He also needs to have financial statements. So his financial statements can't be in his phone. It needs to be put into a system where he can get what? The 4 financial statements. Everybody see how it ties in? Everything builds on top of the other. So what do you need to have at the end? When you do your yearly statements, income statement, equity statement, balance sheet, and cash flow. And you will see that they're all linked together. And that is why we have to go through the accounting cycle. So when we get into class, we'll go ahead and go over this step by step. So thank you for watching. And remember, we're going to do the problems in the textbook as we go through this course. Thank you and have a superb day.